We're on opposite sides. You're live.
All right, we are live because it is what? Wednesday, 11:30 a.m. and this is Listen Up Maryland. As always, I have Melanie Montague with me, and we will have, fingers crossed, Katie Lee with New York Life. She is experiencing some technical difficulties, as we all do. Technology sucks, and we're all figuring it out on the fly.
Yeah.
Um, so we do have all of her contact information in there. If you're watching live, you could also post comments so you could get your answers immediately to any questions you have. And if you see this later on recorded, check her out and reach her out to her and see what she can do for you. So,
Yeah. So a little recap, right? So
all
here
right,
she
just in
comes. She's
time,
coming on in. So there she
just in
is.
time. Hey,
Hello,
Katie,
how
how are
are you
you?
guys?
We're good. How about yourself?
Good, thank you. Sorry about the technology issues this morning.
It's okay. It happens, right?
Every week, every week. Don't worry about it.
Yeah.
Gosh.
Usually
One
it's my
day
fault.
we'll get it right, right?
Hopefully one day everybody will be on the same platform. That'll make it a lot easier.
That would be called a monopoly. There's no way.
Yes, that's true.
Yeah. So anyway, well, welcome. We went ahead and got started, but we were just, said that we were having you. James introduced our show. All of your information is in our remarks. If anybody has any questions, please go ahead and put them into the comment section so we can share them on screen so people can see it. And we were just gonna kind of shoot the breeze a little bit before you came on. But you're here, so we don't really have to do that.
Gotcha. Well, I appreciate you guys let me come on this morning and give me a chance to talk about, my business and what I do for the community.
Sure. Yeah. So let it roll. Let it rip. What do you do? Who are you? Where do you live? I'm just kidding. Did you play that piano behind you?
No, I do play piano, but not one that nice, unfortunately. So I am a financial professional with New York Life, and I kind of tell everybody, honestly, I hate that title. I hate that name. Just because it doesn't tell anything about what I do. I said that at one point, and my husband was like, that makes it sound like you work at a bank or something. So I think the better term would be like professional money solver, or professional people helper. So I am a registered representative, so I help people with retirement solutions, investments, protecting their family, making sure that their families are protected if anything happens to them, make sure that the money that they have worked really hard for is protected, making sure that people can enjoy their life, as they're building their family and as they're building their nest egg, and make sure that they can enjoy their retirement and don't have to worry about outliving their money or not having enough money to enjoy everything.
Okay, so let's clarify what New York Life is. So New York Life, and I can tell you from experience because I interviewed with them many years ago, it is not just a life insurance company.
It is not. That is one of the big misconceptions. A lot of people see New York Life and think, oh, it's a life insurance company. No, so we're a full financial services company, and most of the agents there, like myself, are a registered representative. And what that means is that, we have taken the licensing exams and are licensed to offer market driven and securities driven products, which means that, I can offer more than just life insurance, right? Obviously life insurance is the foundation of any financial plan, and is something that I myself am really passionate about, and New York Life is really passionate about. But our approach is really helping you build your entire financial strategy, not just the protection solutions.
Okay. So that's what's interesting that people don't understand. And if you want to ask questions about life insurance, feel free. That's what she does, part of what she does. But so tell me, obviously you said you're passionate about it. Well, give us a grand scope. When you say, the retirement and protecting this and protecting that, I mean, are you dealing with mutual funds, stocks, bank account? I mean, what are you dealing with? Kind of break it down, because what we know from doing real estate is that this is an area, finances, or an area that people think that you have to like have a ton of money to learn about, right? They feel like that you have to be able to join a Charles Schwab with $1 million in order to get it, not knocking that company because they do people without $1 million.
Yeah.
My point is that you don't have to. It can start with $100. It can start with, very small amount of money to build. So talk about that, because I think that's a big misconception of the general population.
Yes, exactly. And just to kind of give you a little bit of background, I recently got into this industry. When I say recently, about 2 or 3 years ago. And before joining this industry, I would have to say I was probably one of those people, right? My husband and I got married very young. We got life insurance when we first got married, just simply because it was something that, hey, you need life insurance. You're married now. We went to our home and auto agent and said, hey, we need life insurance. Not knocking that agent or that company at all, but I don't think they really understood what they were selling us, and didn't take the time to explain it. They were like, okay, here's life insurance, here you go. We paid it for about a year or two, and then we were like, we're young and healthy, what do we need this for? And canceled it. And I feel like that's where a lot of people are at, and a lot of people don't understand the value of of a protection solution, of life insurance. And then, like you said, a lot of people think, okay, well, I've got life insurance, I have a little bit of money sitting in the bank, I don't need to work with anybody that can help me manage my money, or anybody who can help me kind of have a better strategy in place, because I don't have $1 million. I don't have a huge estate that I'm leaving to my family and things like that. I just want my wife to be able to pay off the mortgage, right? But that is a big misconception. I do mutual funds. I start with some people who start with an IRA or mutual funds starting at $50 a month.
Okay, pause.
Oh, nice.
Let's
Sorry,
talk
what
about IRAs, because the mutual funds become scary for people because it is in the stock market exchange type of arena. It's not a stock, but it is in that arena. And just to clarify, I will say the mutual funds are safer than stocks typically, right? There's different levels of them. But let's go to the IRAs, because that's something that I talk a lot about on Wealth Building Wednesdays, are IRAs, because there are a couple different kinds, and depending on different levels of financial income that you're making puts you in different realms. And I think that's really important, because what people don't realize is IRAs are I think, and you can correct me if you're wrong, you have your opinion, is the easiest way for people to start building for their future, for when they retire. And it can be just small, minute pieces of the pie each month.
Yes, exactly. And like you said, there are multiple different types of IRAs. There's multiple different ways to set up an IRA. You can even set up an IRA with no stock market participation, if that's really the way someone wanted to go. If they want something that's super secure and guaranteed, we can set up IRAs that way, right? I mean, technically, you could set up an IRA through a bank, but working with someone who knows all the different types of IRAs and the different ways that they can be invested is really what's going to get you the best potential return. Obviously anything in the stock market is never guaranteed. You can never really call anything in the stock market completely safe, because there's always risk that you're going to be taking on. But IRAs do have a lot of really good benefits. And like you said, for people just starting out, right? If my husband and I had looked into IRAs when we were in our early 20s, just starting out, it's something you can set up for very, very low cost. It gives you enormous tax benefits. It's a great way to start building up for your future. And a lot of people are like, oh, well, I don't want to put my money in an IRA because it locks that money away for retirement. What if I need it before then? There are also a lot of options within IRAs that do allow you to have some access to that money beforehand if you need it, that give people that little bit of a peace of mind. You know what, I can save for my future, but also still have some availability of that money now.
Yeah, I'm glad you touched on that, because that was one of my misconceptions. Was I thought once it's in the IRA, I can't touch it until I'm 70 years old. But once I joined Melanie's team, a part of our investment group, that was one of the lessons, is we use it for, rehabbing homes, buying off market properties and stuff like that. And a lot of people have no idea that that's even an option without paying hefty fines or extra fees for pulling out early.
Yes,
Well,
exactly.
because that's a self-directed IRA. So you can there's rules with that, and there's rules with all of those kinds of things. And James, you're right. It was when I was probably about like 18 years old, and this person I knew said, well, if you open an IRA today, by the time you retire, you'll be a millionaire.
Mhm.
And I was like, how does that make sense? Right? Like, huh? What? But that sounded really appealing, right? So when you stop and think about it, being a millionaire today is much easier than it was that many years ago. I'm not going to date myself. But the other side of it is that the littlest amount of money, $25,
Yeah.
is what it takes. And you don't have to put hundreds or thousands of dollars. There are maximums a year, and there's things like that go into play. But what also I think is really interesting is how old can your kid be for you to start an IRA for them?
So technically you can start an IRA at any time that you can show that someone has earned income.
Okay.
Right. So if your child, if you have maybe a side business and you pay them for it, or they cut yards or do babysitting, anything like that, you can start an IRA for them. And there's different ways, there's different ways to set it up, right? Because they're minors. You can set it up with them having more or less access to it. But anytime you can show that someone has earned income, you can start an IRA for them.
And so the reason I bring that up is because it's something that people don't realize is that you can help teach your kid at a young age how to save for their retirement. So they're not the people who, when they're older, that are worried about how they're going to take care of themselves when they get to that point, right? That's important. Yeah.
Yes, exactly. And I would like to point out also that there are other types of accounts as well. And to be honest with you, some of them are life insurance, right? Sometimes I like to throw that out there because people think of life insurance and they're like, oh my God, why would I put life insurance on my child? Or, oh, life insurance is just there to protect me if I die, right? But if you have a child who isn't old enough to qualify for an IRA, or they're not showing any kind of earned income, or you're not working with a tax professional to help show that earned income for that child, there are other types of accounts that you can set up also that again teach them how to save very early on and teach them how to grow for their future. Obviously, one thing that we always talk about at New York Life is that there's different types of diversification. One of them is risk diversification, but you should also be looking at tax and equity and liquidity diversification, right? You need that checking account. Your kid needs that checking account. If they sell a toy and make $5 off of it and they want to go spend that $5 on buying a new toy, or they go babysit and make some money and they want to spend money right now, they need that checking account. They need that savings account. They need that cash, right? Just like you do. But there are so many different types of accounts that you can help your children set up, or you can set up for your children and for yourself as adults to save for their future and your future, that may not have as much liquidity, but it's again a very good way of teaching them very early on how to save for their future. And the impact, like you said, when you were 18 and someone came to you and said, if you start an IRA now, you'll be a millionaire by the time you retire. The impact of saving that money and letting it grow is very powerful.
Sure. Well, and let's be honest, sometimes like when kids get an account, right, and they have liquidity at an early age, they deplete it, right? And the whole purpose is for them to have it later, right? So there is some benefit for them not to be able to touch it when they get to be of age, right? To be able to touch it. So let's talk about a little bit about like planning for the future, right? So how do you, this is something I'm going to talk about, and I'm going to bring it up and you take it wherever you want. A lot of times we don't talk about in financial solutions, we don't talk about when people are getting older and how to protect funds that might pass on to another. Do you handle anything like that?
We do. So there's a few different ways of looking at it, right? One of them is through estate planning. And a lot of times people think of estate planning as a legal term, right? You know, oh, I need to get my will in order, and I need to make sure I have a trust, or I need to make sure I have an estate set up, things like that, which are all very important. But there's also different ways of funding that. And there's different ways of handling the way that someone else, the loved ones that you're leaving behind, will receive that money, and the tax consequences of them receiving that money. Now, obviously, you know, I'm not a tax advisor. I can't really speak on tax code or give tax advice, but there are lots of different ways that you can kind of handle that. And it's not just through life insurance. Again, you know, a lot of times people think of life insurance and they think of, okay, you know, if I have $100,000 life insurance policy, if I pass away, my wife or my kids or whoever gets this 100,000. Yes, that is one type of life insurance, but there are multiple other types of life insurance and types of ways it can be set up, and other types of accounts that you can set up also to make sure that you're leaving a legacy for your family, and not necessarily leaving a burden of, you know, how do we pay off these debts? How do we pay off these expenses? What do we do with this money? How do I make sure my family actually gets this money?
Because there are ramifications when somebody passes on, depending on how it is set up, whether it's set up through an estate or a trust or nothing, right? And
Yeah.
it goes to probate and all that kind of stuff. There are legal and tax ramifications for that, which you nor I can talk about because it is not in our realm. I sell houses, you do finances. But we want to make sure that, like, if that's something people are thinking about, they should affiliate themselves with somebody that has the knowledge, usually an attorney and usually a tax accountant, that can help them set those things up properly and understand the flow of it, because it is a little complex, right? And I bring it up because James and I often work with people who are in these types of situations where somebody in the family passes and we are then hired to sell a property, and then it is like a cluster because nobody knows what the hay is going on. So, and they don't know where to go. So it's something that we don't talk about. So if you're thinking of like the future and you want to know about some of the ways you can put money into places to help protect your family, going to somebody like Katie with New York Life would be a great way to start to be able to plan how that's going to look. And it's never too early to plan.
Exactly. Right. And you know, like you said, a lot of it does come down to the legality of it, the tax codes and the tax consequences of it. You know, one thing that I really recommend is working with a team, right? Your lawyer may be able to handle some of the tax code and may be able to help you understand some of it, but they're probably not the expert in it. You know, your tax advisor or your accountant may have a recommendation on how to set up an estate or how to set up a trust, but generally they're going to need a lawyer to do it. And the same thing with us, right? You know, you need someone who can do the financial aspect of it as well, to work as part of that team to make sure you're really fully set up. Another thing I would like to kind of bring up in that too is, you know, a lot of times when people think about estate planning and protecting their family and things like that, they only think about what happens if I pass away, right? But there's more to estate planning than that also. You know, what happens if, heaven forbid, you get in an accident or you have a long-term care event and you have to go into a facility or have to have an in-home health aid, right? That's part of estate planning also, is, you know, making sure that you have that properly funded and planned, and make sure that you've discussed with your family and your attorney and everybody else what your wishes are and what the best fit will be for your family and yourself. And that goes into the estate planning also. You know, a lot of times it's not just what happens to me if I pass away.
Yeah.
Like Melanie said, we deal with this a lot in real estate, and I just want to stress the importance of having this in order, because even when you have it in order, unfortunately, you see a lot of families bicker. It gets ugly. They want to fight over this and that. And if it's not in order, I've seen families fall apart over it. I've seen families fall apart when it is in order. So, I mean, to have that planned out and just have it clean cut, to not have your siblings, like God forbid, I've seen brothers and sisters fight over what I would consider minimal amount of money, and it just breaks your heart. So having that prepared, because I'm that kind of guy. I'm young. I take vitamins. What do I need life insurance for? Why do I care about my estate? And unfortunately, if, you know, tomorrow is not guaranteed for anybody.
Right.
Exactly.
Yeah. Right. So that was kind of a heavy subject, right? But it's something that we should plan a little bit more over. So people like us don't have to clean up your messes. No, I'm just kidding. We'll clean up all of your messes.
It's
when it comes to
emotional.
real
Like,
estate.
yeah, it's hard to watch from a distance.
It is hard to watch,
Mhm.
right? And we're playing mediator a lot of
Yep.
times. And I would say, like, if you're watching this and you want, you need a reference for somebody to guide you in the sense of an attorney, I can refer you to an attorney that can guide you to somebody near you, and also tax people if you don't have that. And then you can figure out if those people work for you, or at least then you have an idea where to start, right? Kind of a thing. Doesn't mean you have to use those people. We're not affiliated with those people, but I can guide you because we've used them in the past.
Mhm.
But I would say this, let's talk a little bit about life insurance. I know it's kind of one of the things that people like, you hear it on TV when you're old, like the old people, it's on every old channel, term life. You must have term life. So yeah, let's get the elephant out of the room. Like, what the hey is life insurance? Why should you have it? What's the difference? I mean, just, let's do it, man.
Yeah. So, like you said, what we just kind of discussed was a very heavy subject. And, a lot of times life insurance can take on that tone also, right? Like you said, a lot of times people are like, I don't want to talk about life insurance because that means, kind of coming to terms with what happens later in life and, what happens if I pass away. But that's not all life insurance is. And that is one of my biggest passions, I guess I should say, since starting this business, is helping people understand life insurance is about not just protecting your family when you're dead, but also protecting your life, right? Like you said, you hear all those commercials, term insurance, term insurance, term insurance. And the big thing right now, buy term and invest the difference. That's great. A lot of people use that strategy. And if you use it and do it properly, it can definitely be very, very beneficial. But there's other types of life insurance also that don't get talked about a lot, that aren't taught about anymore. The two big ones that most people know are whole life and term life. And whole life is life insurance that's meant to be in place for your entire life, right? Term life is what we generally consider as temporary coverage. It's great for that brand new homeowner, right? They have this $200,000, $500,000 mortgage. Oh my God, what happens to me if I pass away? How is my family going to pay for this house, right? That's what your term insurance is for. Your term insurance is to be in place when you have those large debts, when you have a large amount of money that you need to leave behind for your family if something happens to you. Whole life is meant to be in place for your entire life. It is there to protect you no matter what you have going on in your life. And what a lot of people don't talk about is it builds cash value, right? And that cash value is essentially an attached savings account, if that's how you want to view it. But it has a lot of other benefits, right? It's money that you can access tax-free. I've been seeing a lot of things going around TikTok lately about, bank on yourself, use whole life to bank on yourself. And then I get, friends and family calling me and they're like, what does this mean? And I'm like, it means you can literally be your own bank, right? You can borrow money from your whole life policy. You can take money out of your whole life policy, and it's your money. You get it tax-free with some stipulations, right? We have to kind of say that, but you get it tax-free with under most circumstances. You have the option of paying it back. You don't have to. If you pay it back, you pay it back to yourself, right? I met someone when I was very first starting getting into this industry, and she is a current client of New York Life. And she was like, you know what? I am so happy I met a New York Life person when my daughter was young. She's 19 now. She goes, I bought her first car out of her whole life policy when she was 16. I paid the money back into it. We're now using it to fund her college. She is literally being her own bank because she took the time to learn about other types of life insurance and how she could use it to build her child's future. So that is one of the main ones that people do know about, but don't necessarily know how it actually works and how it can protect them. But there's other types of life insurance also. There's other types of life insurance that are actually in the stock market. They have stock market involvement, and you can grow your cash value through investments in mutual funds in the stock market. There's types of life insurance that can be a little bit more flexible. You can raise and lower the death benefit as you need to. You can raise and lower the payment as you need to. So there's so much more to life insurance other than just, if I pass away, this is what my family gets.
Yeah, well, I think that what happens is people like kind of like do a little browsing on the internet and kind of do those calculators to see how much they'd have to pay. And then they're like, holy crap, I can't afford to pay that. I can't afford to get that. Like how, I mean, that's crazy. And bringing into perspective the whole like college scenario and the car scenario that you just gave. I mean, it's something that like student loan debt is absolutely a real huge like epidemic in our world, right?
Yeah.
Is that the right word? Epidemic? Yeah, whatever. It's a big ass problem. Okay.
It's corruption.
Big ass problem. So the thing is that if you can help your kid go to school and get out of school without having $200,000-$300,000 worth of debt just to go to school, and they're probably not going to use that degree anyway to do anything that they went to school for. They're actually going to do like I did and go to real estate. Then the thing is that your kid's starting off really behind the eight ball, right? And James will also say we see people struggle with this every day, right? Like their student loan debts, once they come into play, they just hinder them from having home ownership, having a lot of things that help build wealth in generational wealth. And we hear that all of the time lately is generational wealth. Here's the thing is generations don't change if something doesn't change to show them a different way, right? So that's where like having key players helps in understanding these types of things. So I'm glad that you brought that situation up, because that's something that if you're watching this, it may be if you don't believe in having like for yourself or what, maybe you get it for your kids, right? Just to help you leverage your kids so that when you go to retire, you're not selling your house for what it's worth when you bought it 50 years ago, and you should be making $500,000 profit to go buy your retirement home. Instead, you're walking away with $20,000 because you didn't plan appropriately, right? And it's not that people are doing wrong. They just don't know.
Yes, exactly. And that's a lot of it. That's why I said when I first got into this industry, I would have considered myself one of those people, right? It's a lot of people don't know. It's not things that are taught in school anymore. It's not talked about at college anymore. The same thing. So a little bit of just a funny story. My college degree is in fashion design. And that's something that I was absolutely passionate about growing up. And I was very lucky that my parents really encouraged me to follow that and go get that degree. But after graduating, I very quickly realized this may not really be the right path for me. And I feel like that's how a lot of people are. And, getting a little bit off subject here, but back to the student loan thing, right? Part of my mindset also is that we're expecting 16-year-old kids to decide what they're going to do for the rest of their life.
Crazy.
It's
and
crazy.
Not only that you're taking on student debt that's going to be with you the rest of your life. You can go through bankruptcy and there's no way to get rid of it. It's attached to you until the day you die, until you pay it off. And it's ruined a lot of people's lives. Like you said, they don't even know what they want to do with their life. And now all of a sudden they own $200,000. And I know people that are, and they're in their 60s and they're still paying off their student debt. And like you said, most people get a degree, which is great because you need it for a lot of jobs. But 80% of my friends that have degrees, they're unrelated to what they do with their like current life. So it's a lot of pressure. It's a lot of, I think it's nonsense that you could do that to a young person, to just attach that kind of debt to them for paid off. I don't care if you're 70, 80. I don't care if you're on Medicaid and barely making it. You still have to pay that student debt. Like, come on.
Yeah. It is nonsense. I like that word, James. Nonsense. It's nonsense out there. Nonsense. See, we can make a heavy subject light and fun. No, but it is true. So I love that story. And I think, and what was that? She did what, whole life for her daughter or her child?
She did. She set up a whole life policy, literally when her daughter was born.
Okay.
You can set up these policies on your children as soon as they are born.
Okay. And then idea. Give us a round and about how much you would be required to put in on that monthly.
So, I mean, bare
Average.
minimum.
Yeah.
Bare minimum, if you're looking at an infant who had a normal pregnancy, normal birth, no health issues at birth, I would say the bare minimum, I think, is like $20 a month.
Okay.
So
show it's affordability for people, right? The affordability for people.
Right. And, if you think about that, $20 a month for your brand new child. And a lot of times, again, this isn't something people are thinking about, right? They've just had a brand new child and they're thinking about, oh my goodness, how do I protect this child? How do I keep this child alive and make sure that I'm, raising it properly and just dealing with the sleepless nights and learning how to feed this little itty bitty baby, right? But a lot of people are also thinking about, oh my God, I have a baby now. How do I protect their future? What are they going to want to do when they grow up? How do I plan for that? Right?
Yeah.
And it can be as affordable as $20 a month. Now, obviously, the more you put in it, the better you fund it, then the better it's going to look at the end, right?
Yeah.
But there's so many different opportunities out there.
Now, if I go with the bare minimum plan for 20, can I put in more if I choose to? Or is it a set rate?
So with the children's policies, there's usually a few different options. We usually have a few different ways that we can set it up that it can be increased at a later date. If you're looking for more flexibility, then you would generally want to go with the life insurance that's in the stock market, which is actually, it's called a variable universal life. And those have a little bit more flexibility to where you can put more money into them as you decide to, and you can kind of grow it over time.
But it's tied to the stock market, which is naturally growing. And I know when I say that, people are probably rolling their eyes like, yeah, right. Have you looked at the stock market lately, lady?
On the way up today.
And I'm like, yeah, I have looked at the stock market. Have you looked at it over the course of time? It's on an average trajectory of 10% increase, up and down.
Yep.
So if you look at it at 10% over the course of time, the average is a 10% growth, right?
Yes.
Whether it is up or down, drastic or not, 10%. So where else can you grow your money? 10%. I can tell you any bank right now is not growing at 10%. So if you're putting in, just put this in perspective. If you start one of these accounts for your child the day they're born and you go to age 16 and you only put $20 in, it's only $3,840. But that's without the growth of any sort of stock market adding to it, right? So your total investment is $3,840 for that time at the minimum, $20, right? And just trying to spell it out a little bit for simplicity for people, because it's not over their head that they can't do it. And then, so you look at the stock market and look, that lady you said bought her 16-year-old. The reason I use 16 was she bought her first car using that life insurance policy. So that meant not money out of her bank account, money out of the money that she had saved over the course of time and naturally grew through being tied through different funds, right?
Yes.
So that's really what I wanted to point out. Let that sink in. That's good.
Yes, exactly.
I think the $20 is huge because a lot of people struggle to make it day to day. So, I mean, it's hard to think long term when you're barely surviving the short term. And when you think of this kind of stuff, you're just thinking, oh, only rich people can do this. I don't have hundreds of dollars, but $20. I mean, I know some. I think the most recent one I looked at, I think 70% of America can't afford a $1,500 like mistake that month. Like if they have an extra bill at $1,500, they can't even afford to pay their bills. But I feel like we could all squeeze $20 if we really, really need to, which honestly, you really need to.
I'm going to just break this down just like a commercial. That is only 67 cents per day for 30 days. So the reason I say that is because how many of you go to Starbucks at least once a week? So let's just say the average cost. I mean, I'm not saying don't go to Starbucks and have luxuries, but if you cut out one, or Chick-fil-A, if you cut out one time a week or one time a month, you would have the $20.
Exactly.
I'm pretty sure I've seen this commercial.
Did I write that commercial? I don't think I did.
Are you watching the old people channels, Melanie? Is that what's going on?
Come on. What do you do? Nothing like the Family Feud.
Yeah. Old Price is Right. And
No, reel it back in. But seriously, but seriously, when you really break it down that way, like we break down numbers on our real estate team all the time, right? When it sounds like, oh, you're going to sell 24 houses a year, it sounds like a lot, right? When you break it down and how many people you have to contact and you break it down into like a daily, weekly, monthly type of thing, I mean, it becomes so minuscule that it's almost like you're almost dumbfounded at how simple it is.
Yes, exactly. Yeah. And, like what James was saying, a lot of times people think about, oh, I can't take on that extra bill right now, or, and I get it. Things are tight for a lot of people right now. And the statistics are staggering, especially when it comes to inflation and unemployment and things like that. But, when you're talking about saving for your child, what, I don't even want to call it sacrifices, but like you said, if you give up that one Starbucks a month, maybe you can be able to put that $20 towards saving for your child. But a lot of people also don't think about how many times do you get monetary gifts when you have a baby? Right? Yeah. When your children have birthdays, how many relatives just give them cash?
A lot.
Right? Yeah. And I have 2 kids of my own. They're 11 and 13 now. And of course, as soon as they see that cash, they're like, "Oh, I got to go spend it. When can we go shopping?" Right? But teaching them, take half of it, take a small amount out of that, and put it towards the savings. Whether it's a savings account in a bank or whether it's through a policy like this, you don't have to necessarily come out of all of this money out of your pocket, right? Use some of the gifts from friends and family to help you save for your child's future.
So we teach our kid that he's allowed to have 10%.
Ooh. We do 50%. So we're a little bit more liberal, but we do 50%. 50% they can spend, 50% they have to save.
And the reason being though is teaching how to save, right? Yeah. And how to live off of and saving money. So like how to get to where you need to go so that they'll be financially set. Now, we're a little harder, I guess, in that sense, but I guess 10%. I know, but the kids got money.
I want to live with that government.
Yep.
Hey.
But he's going to thank you when he's an adult and he has that money.
And that's what it comes down to. Like we see it with people that make a lot of money. There's just so little, like I think you touched on it, stuff you should be teaching in high school and college. My senior year, they had to fill classes and I ended up taking home ec. And I'm like, I'm baking stuff and doing dishes. Like, and they don't teach you anything about taxes. They don't teach you anything about financial education. And it's just absurd that unless you have that family, unless you have that person in your life, which so few people do, to teach them that, you just have no idea. And I mean, you're just spending paycheck to paycheck because that's all you know. Like, hey, I got money, let's spend it. And I mean, that was me at 16 when I got my first job. If I had another paycheck coming in, I'm like, I got to hurry up and spend this last bit of money because I got more money coming in. And I just had nobody there to like guide me. And unfortunately, that's just the family I grew up in. They didn't have that financial education either. So it's not like they're neglecting you. It's just they didn't have that education. And you don't know what you don't know. Like,
so it's one of those things where I always say that in our country, we're taught how to make money and we're taught how to spend money.
Mm-hmm.
Yeah. We're not taught in the middle and how to build wealth. No. And I think financial literacy should start to be taught to children in kindergarten.
I absolutely agree. I mean, like I said, that was one of my big things with coming into this industry was just the amount of information that's out there that most people don't know. And it's not taught anymore.
I don't think it was ever really taught, to be quite honest. Not saying that it was, but I think like when my parents were growing up, like there was no such thing as like credit cards, right? So people just had to save, right? If they needed something or what, if they had to save. Whereas today it's a little more like, oh, let me just go to get a credit card, or I need a car and stuff like that. So I think it's just like the evolution of how like we didn't have to where now we have an abundance of availability of not free money, but money that we can get, but not how to use it properly, right? How to not put yourself into the perspective. So now it's time to teach.
Yes, exactly. Yeah. And, my other thing too is that, like you said, we're taught how to make money and we're taught how to spend money, right? And yes, there needs to be an in-between. How do we save that money? How do we plan for more than just today, right? Because James, you said it earlier, tomorrow's not guaranteed for everybody, but what if it is, right? You also can't live every single day thinking, oh, tomorrow's not guaranteed, I'm going to spend every single dollar I have, right?
Right.
You want to
How
be
I
able
spent
to
my
plan.
20s.
Yes. You need to
And
be
you
able
just
to
turned
plan
30.
for both scenarios, right?
Mhm.
You need to be able to plan for every what if, but it also should not be, oh my goodness, I got this money, I have to save all of it, I can't do anything for fun right now, I
Yeah.
can't enjoy this time with my family because I have to save for my future. No, it has to be a balance, right?
Yeah.
Because
Yeah.
nobody knows what the future holds, and that is one of the things that I really like to teach people about is how to have that balance. How do you plan for your future and your family's future and still enjoy today? But how do you not over enjoy today and not plan for your future?
Right. Right. Yeah, I think that if you look at the different generations, right, they all have gone through different phases, and they've gone through different phases based on the economics of our country and our parents and where, and what generation they're from, right? So I think it's interesting. We talk about this a lot on our real estate team and stuff, and because we work with the public all the time and we have to educate them a lot. I mean, I had somebody once, they might watch this and they're going to laugh when they hear it. They had a budget. I mean, I commend them for having their budget. And it was like, this is the max that we can pay for a mortgage. And in our conversations and travels, they told me about how they love Chick-fil-A, and they went to Chick-fil-A like once a week, every single week. And I was like, oh, well, then this house they loved came up. And I was like, and so we ran the numbers with the lender, and the lender came up and said it was this amount. It was literally $14 more. And she was like, no, can't buy it. And I said, okay, well, you told me you went to Chick-fil-A every single week for 4 weeks, every week of the month. And she was like, yeah. I was like, just don't go to Chick-fil-A once and you got your money. You get the house you want and you still have Chick-fil-A, So it's just interesting the way that our brains are conditioned. And so that's why we love doing things like this with people like you, because then we want to be able to try to condition people to seek more information, because there is so much for people to learn, and they could be in such a better financial position with just some little tiny tweaks in their world.
Exactly.
And I like this one as well because we introduce you as a human being. When it comes to sales, realtors, yourself, we get bad reputations. Nobody wants to talk to us. They think we're trying to push something on them, sell, sell, sell. But in reality, we're just another person. And I mean, I had a pushy guy call me in my 20s when I didn't even have health insurance yet. He's like, you got to get life insurance. I'm like, I can't even afford to live. You think I care about what happens when I die right now? But it's just, we talk to people and you get to realize that not everybody's out there to make a penny. Like, we don't consider ourselves being in sales. We think we're in the service industry, which we are, because we are here to serve and help you figure out what's best for you. And it's not, oh, well, I call him, he has to sign with me. He has to sign up for this industry. He has to pay for this plan. It's just education. What's the worst thing about a 30-minute phone call where you can educate yourself? You just watch this video and learn more. You learn more in this video in the last 30 minutes than you probably learned in your first 30 years of your life.
Yeah.
I hope so. I hope some people have been able to pull some good information from it.
Even with our silly little stories in the in-between.
Yeah.
Well, what I just put on the screen was Katie Lee's cell phone information and where to text her. So if you want to know more information, as you can tell, she's not a hard sale person. She is very easygoing, just uses real life experiences to talk with you. If she was a hardcore salesperson in the sense of like the timeshare people, she would have been hard selling us, and she did not.
No.
So you can trust her. But contact her if you want to know more. If you want to just look her up online, here is her website information. So you can go there, and then maybe if you feel a little more comfortable and you just want to have some questions, and reach out, give her a holler, and see what she can answer for you. It gives you something to chew on and figure out how to live your life in a better way and not get caught with your pants down. It's not fun.
Yes, exactly. And I love when people reach out to me just to ask questions, just to set up a time to sit down and review. I don't charge anything to sit down and review what you currently have in place. I'm not here to try to take over everything you currently have. If you have someone you're currently working with and you just want a second opinion, that's completely fine. You know, I don't charge anything. I'm not here to try to push everything on you. I'll sit down, help you figure out what you currently have in place and maybe what you could be working on.
Perfect. That's exactly what we like. And we have got to go. It's almost 45 minutes. We love talking to the community. James and I have so much fun meeting people. Yesterday, I went to the locals farmers market. So if you watch us for Juice Buzz, I picked up some juices, my kid and I, and it was fantastic. So just a little plug for Miss Juice Buzz.
I've had her juices before. They're very good.
They are very good.
Yeah.
So we love doing this. We are here every Wednesday at 11:30. And we do record these. They are on my YouTube page. Are they in your YouTube page, James?
Yep.
Your
they're
YouTube
all
page.
over Facebook. They're all over LinkedIn. You can find it. Yep.
You can find it. Katie, you want to share away. We are not crazy like that. The more exposure we can get, that's the purpose, right? Let's do it. We thank you very much. James, what's closing remarks?
Just glad we got to meet you, Katie. Get the financial education out there in a simple format without people being stressed out about a phone call. So appreciate your time.
Absolutely. And thank you guys so much for reaching out and for having me on.
No problem. All right. Until next Wednesday, Listen Up Maryland with James and Melanie. We'll see you next week.
See ya.